Good morning. Sorry, good afternoon. So used to saying, good morning with trading hours. So good afternoon. Welcome to Mid-Cap Radar. I'm Reema Tendulkar. With me is Ekta Batra. Hi, Ekta.
Hi, Reema. Yes, absolutely. It's the afternoon sun, which is not really shining on the markets at this point in time. It's a bit dull. So we have a lot to go through in the next 30 odd minutes. Let's take you through the top stories. Stocks see all-round selling as the global uncertainty could coupled with the deadline for compliance with the SEBI disclosure norm for high single stock exposure by FPIs weighs on sentiment.
Bazaar style surges over 4% after listing flat at 389 rupees per share. The management tells CNBC-TV18 they're growing at a CAGR of 33% and they intend to grow at the same rate.
Voda Idea falls 10% after brokerage Goldman Sachs issues a sell call on the stock with a target price of 2.5 rupees per share, forecasting another 300 basis points market share loss for Voda Idea over the next 3 to 4 years.
SBI Cards climbs more than 4% after Goldman upgrades the stock to a buy from a sell, raises the target price to 913. Meanwhile, Goldman also upgrades Aavas Financiers to a buy with a target price of 2,160. They see value emerging as the company has improved its growth outlook. The stock gains 4%.
VA-Tech Vabag zooms over 4% after the company bags an order worth 2,700 crores from the Saudi Water Authority for a desalination plant.
Well, we're at the day's low for the markets now. It's 24,860. We've even breached the morning low that we had, which is just shy of that, 24,900 mark. But again, there has been some selling pressure, which has picked up. The mid-cap index is seeing a similar cut of about 1.25%. The advanced decline ratio skewed in favor of the stocks declining. 2 stocks advancing for every 5 stocks declining. Lots of individual names, come up on our chart. So there are many PSUs, particularly oil marketing companies. So you've got HPCL weak. Oil India is down nearly 4.5%. This week, Oil India has seen a cut of 15%. Then other PSUs like IREDA, BHEL, Hutco seeing profit booking. Vodafone Idea, Industars, we'll discuss more about them, but they are amongst the top losers. And banks too are not immune to the selling pressure. Actually, hardly anything is, Ekta.
Yes, absolutely. At this point in time, it's a tough market that we have on our hands. Like you mentioned, all of the indices are in the red at this point in time. But a couple of stocks which are managing to hold their head above the water includes, say, Narayana Health, which is up around 3 odd %. And we have Brigade Enterprises, which is up around 1.3%. Just keep your eye out on SpiceJet, where the issues continue to expand. There's 3,700 crores of outstanding lessors on that, and there was some amount of there was a flash with regards to grounding of planes as well. So maybe we'll try and get you more details on SpiceJet. But onto our segment mid-cap movers, we have with us Vamakshi to take us through all the mid-caps that are moving around in trade.
Well, absolutely. It's red across the screen when it comes to the mid-cap space. And in fact, Vodafone Idea and Indus Towers, like you were mentioning earlier, are some of the stocks that are leading the declines this time around. Of course, there's a note that came in from Goldman Sachs and they have a sell rating on both of these counters. But apart from that, we also have Raymond Lifestyle, recently listed, down nearly 5% today. Oil India too, down nearly 4%. But there are some stocks which are defying the momentum in the market and they are bucking the trend. They're up in trade. That includes Gujarat Fluoro, which is up a staggering 8%. We have Glenmark Life up nearly 5%. Sumitomo Chemical too is seeing an uptick of almost 5%, and Suven Pharma is also up nearly 4%. But apart from this, there are a whole host of counters that are seeing a decline, and that too with strong volumes. We have Indigo Paints down nearly 3.6%. Of course, there was a block trade in the morning, so that really is driving the volume there. But apart from that, Easy Trip, Sapphire and BHEL are just some of the other counters that are declining along with strong volumes.
Thank you very much for that. Hemant Kapadia from KR Choksi Securities is with us now for a Friday technical check on the markets. Hemant, tough market today. How would you trade it?
Very good afternoon, Reema. Thank you for having me on the show. It's always a pleasure. 14 days on a trot was a bit too much, Reema. The laws of gravity needed to catch up. That's what is happening. We had 3 bullish gaps. I think the second one is almost getting covered up. First got covered up, the third one is left. So bit too much. So we're seeing a time price correction. I don't think this is a trend reversal yet. It's just that we've moved up 1,300 points and we are seeing a retracement. Another thing, the VIX, which was relatively sanguine, has slowly creeped up to 15 almost. Now about 13.5, 14, the VIX starts to pinch. And if it crosses 15, there's further problem. So frankly speaking, it's just that the market's moved one way and we are seeing a correction, profit booking, however you term it. The bigger picture still hasn't changed. Yeah, that's about it.
Okay, all right. Bigger picture hasn't yet changed. So what would your Nifty bank target be, Himain?
Okay, as far as Nifty target, ekta 24,800 is a decent, if not good support. If and only if 24,800 gets broken in terms of closing, then I would sort of stick my neck out and say we'll probably see somewhere 24,600. Otherwise, if 24,800 holds in terms of closing, things should be relatively okay. And as far as Bank Nifty is concerned, it's been weak. It hasn't performed. Nifty posted a fresh high. The Bank Nifty high was far away. We've been in a corrective phase for too long. That's what's surprising. It shouldn't have fallen so much as the Nifty did because it hasn't performed. Nevertheless, 50,500 is an important level, which I see should provide support. The make or break level currently is not applicable, but that comes at around 14,689. That I would say is a make or break level, but not relevant at this point in time.
Okay. Specific stocks you want to share with us?
Yeah, a couple of stocks which look like bucking the trend. The first one is Gujarat Gas. We've had a sharp move. Now we are consolidating. The mechanical indicators are in support of the move. We've seen resistance from its earlier high, but it seems set to take all of the resistance levels on and cross those. The volume is also supporting the move. So one can buy Gujarat Gas, which is at 669. I would say it's a conditional buy call. One can buy it at around 660, stop loss of 630, and target of 720. Conditional buy call, risk reward ratio 1:2. Second one is Dabur. Dabur is on the cusp of giving a breakout from here. We've been consolidating for around 10 trading sessions. We're currently at 650. One can buy Dabur at 650, stop loss of 630, target of 690. We've been in a protracted range. The bigger range is between 600 to 660. The tighter range is between 635 to 655. Everything seems to indicate the daily MACD indicators. It's about the 55-day exponential moving average. There is also unison on the weekly chart. So there is a buy call on Dabur.
Thank you very much for that. We'll slip into a very short break. On the other side, we'll get you our exclusive conversation with the management of Star Health Insurance.
Welcome back. Well, time for an exclusive conversation now. Star Health Insurance tells CNBC-TV18 that they are evaluating plans to entering the motor insurance market and are also keen to enter life insurance. Our colleague Yash Jain spoke to Anand Roy, who's the MD and CEO of the company, on the future expansion plans and business outlook. Listen in.
As far as this year is concerned, we believe we are aspiring to do around 18,000 crores of premium as compared to 15,000 crores which we did last year, which will translate to around 18% growth, which should be in line or a little better than the industry growth rate.
Okay. Now, if I have to understand a few things on the underwriting level, in the first quarter, the underwriting profits came down a little bit. I think FY24, you ended with a number of about 90 crore there. FY25, what is the kind of improvement that we could have, or what is the kind of number that you expect to see at the underwriting level itself?
See, totally, our aspiration is to reduce the combined operating ratio by about 100 basis points. So this will come off an improvement in our underwriting, results, as well as it will come through some improvement in our expenses. So I do not want to give a particular number, because see, underwriting results are a factor of many things. It's all about the disease outbreaks in the society. As I told you, we are an insurance company and we have to be prepared for uncertainties. So while we did what we did last year, our aspiration is to improve upon that, but I do not want to hold the company to a particular number as far as that is concerned.
Okay. Just taking the history in terms of the last few years' performance and putting that context into where you want to grow, 30,000 crore in the next 4 years. Would that mean, at least by the last few years' performance, that the underwriting profit could be well in excess of 500 crore with the combined ratio that you've maintained in the last few years?
So we have guided for, or we have kind of, planned internally for tripling our profits after tax in this next 4 years' time. So last financial year, our PAT was around 850 odd crores.
Correct.
We expect that by FY28, when we reach 30,000 crores, our PAT should be in the tune of 2,500 crores. Now, what would be the mix of underwriting and other areas in that?
I've just gone by what you've done in the past.
Yes, probably. I think aim is to make sure that underwriting standards and underwriting profits improve, which will be guided by various things. But I think overall profitability of the organization is what we are focusing more on.
Okay. A word on the combined ratio, of course. You've said that about 200 basis points is overall that you see a reduction over the next 4 years in your combined ratio. Help me understand the journey towards it. This financial year, what could be the reduction? And then once it keeps improving, it gets harder for you to bring it down further. Then for the next 3 years, what could be the journey?
So this financial year, we are looking at about 100 basis point improvement and a 50 basis point improvement after that. As you rightly said, it's not possible to keep on reducing it by significant amounts every year. So gradual reductions will happen over the year. But this financial year, we believe that 100 basis point improvement over last year can be done.
Okay. One thing that I wanted to understand is something that which the industry is anticipating, that's the composite insurance license. Assuming that December, the winter session, it does find the approval that is required, what would be the right amount of time that you would take to enter the term insurance as you plan to sell that side? Would it be a financial year FY25 or calendar year 25? Or am I being ambitious with both those numbers?
So yes, first of all, we have to see when this bill passes through and how long the regulator takes to articulate the the guidelines for a composite license regime. So we'll wait for that. But what I can tell you is we are very keen to enter into adjacencies. We are looking at protection plans in life. We are also looking at non-life segments, and we are evaluating all of these as we speak. Finally, what the regulations, how they come out, what the board approvals that we will have to take, what will be the capital requirements for these kind of composite license regime. We'll have to look at all of that and then evaluate. But we are very interested in this particular development.
Okay. You spoke about other non-life segments, and there has been a report that you are also within the organization at this point of time contemplating and interested to enter the motor insurance space. It's a large market, of course, the two top markets for general insurance companies. What is the thought? Because it's distant from what you do right now. What is the thought behind entering the motor insurance space? And is there any specific kind of business that you would want to do? If you could elaborate on that particular point.
So we have conducted surveys within our distribution system to understand what are the opportunities which is there. And ever since this composite license came into discussion, and we are getting strong feedback from the market and from our distributors that they will be happy to associate with us for other lines of business, including non-life. Okay, and as you rightly said, we have a 20 million customer base. All of them probably have vehicles, whether a motor car or a two-wheeler. All of them have homes. All of them definitely are not protection plans are very low in our country. So these are opportunities that we are evaluating. We have to see what are the profit pools available in which areas, and we will let you know when we have a concrete plan. But right now it is just an evaluation stage. We will come back to you.
Okay. A couple of questions on some things which transpired very recently. Just about last month, there were certain amount of hiccups when it comes to a few hospitals in the Delhi region, particularly the Max brand. Help us understand what are these conflicts, because very recently we saw you resolving certain issues with certain hospitals in Gujarat. What were the issues with Max? Has it been resolved or not? And on the other side, a lot of consumer complaints are coming with respect to claims not being settled. Are you looking at it very actively now to sort of bring down those numbers and ensure the partnership with hospitals does not throw such issues at you regularly?
Absolutely, that's a good question. And see, we all have to accept that hospitals, insurance companies have to live together in this business, okay? And there is no question of having conflicts with them. There are negotiations, there are commercial agreements, and there are commercial discussions which happens, because of which certain hospitals partner with us on a preferred mode, some of them don't. These are ongoing, discussions that will keep happening. I don't want to name any particular hospital, but I think, at Star Health we have 15,000 hospitals growing the network, and we believe that, we will play an important role in the relationship with hospitals also. So we have no qualms about that, but we do not want to be adversarial in terms of our partnership with hospitals. That's very clear. As far as customer service and customer experience, claim services are concerned, I can tell you that that's paramount to us. We are very, very keen about making sure that our customers get the best experience. And that's why, having a good relation with the hospitals also play a big role, because sometimes the friction, not sometimes, most of the time the friction happens at the hospitals, when the customer is getting discharged or wherever. So I think these are areas where things will keep on improving, but I can assure you from our side that, we believe that customer experience has to be the top.
Interesting conversation there. We'll slip into a break. We'll come back with more on the market. Stay tuned. Welcome back. It's a red-looking market, but there's one stock which is holding up just fine, and that's VATech Vabag. It's won an order. Upasna joins in for more on that. Upasna.
That's correct. VATech Vabag continues to remain in focus today on the back of its order win, and we can clearly see the stock surging. The company has bagged order worth 2,700 crores from Saudi Water Authority for a desalination plant, and this order is for EPCC contract, which includes design, engineering, supply, construction and commissioning of a new mega desalination plant. The company expects to complete this within 30 months, and the order book as of 30th June 2024 for the company stands at 10,700 crores. In our earlier interaction with the management after its Q1 FY25 numbers, the company had given us an order book guidance of 15 to 17,000 crores by FY25, and management remained pretty confident about achieving its medium-term revenue growth guidance of 15 to 20%. Hence, this stock remains in focus today on back of the order win.
Okay, all right, Upasna, thanks very much for that. Let's concentrate on Angel One. It's under pressure, reacting to its August business update. Vimakshi is here with more.
The company reported its August update, and in fact it looks like a rather mixed update from Angel One. Gross client additions stood at 9 lakh. This is a downtick of almost 21% on a month-on-month basis, and in fact client acquisition has dropped on a month-on-month basis after 3 consecutive months of showing an uptrend. In fact it was up nearly 21% in July, so definitely this is a big negative that is playing out on this counter. Client base, however, it is up nearly 3.3% MOM. The average daily orders are seeing a downtick of 1.4%, but the average daily turnover has managed to recover as compared to what we saw in July. In July, it had dropped by 5% month on month, but this time around, it has managed to rise by almost 3.1%. As far as the market share of the company is concerned, in the equity market, they're flat at almost 19.3%. F&O market share has been flat for the third consecutive month and stands at 20.7%, but the commodity market share has been gaining and in fact has risen for the third consecutive month. It's up nearly 180 basis points, but it is definitely the gross client addition that has slowed down that is pulling the stock lower in the trading session today.
Okay, there's also Dream Folks, which you're looking at, Vamakshi, where the company's launched highway dining for travelers. Interesting. What have you learned?
Well, absolutely. The company has announced launch of its newest service, which is highway dining for travelers, like you mentioned. The service will be available at 600 plus outlets along key highways, and the members can have specially designed meals at popular restaurants on more than 60 highway routes from major cities. Now, why is this announcement very important? Because traditionally, the company is present in India's airports and railway stations. This will be an expansion beyond their regular business, and that is what the street is excited about. Now, keep in mind that for FY25, the company had given a revenue growth guidance of 20%, gross margins of 11 to 13%, and adjusted EBITDA margin of 7 to 9%. So it will be interesting to see how this expansion actually plays out on their guidance. So definitely on the back of this news flow, the stock is trading higher in the trading session today.
Okay, all right, Vamakshi, thanks very much for that. So Dream Folks, that stock is higher in today's trading session. Just want to point out that a couple of these frontline stocks are really taking it on the chin this afternoon. So State Bank of India is your top loser on the Nifty. That's down around 3.7%, followed by HCLTech, which is down around 2.5%, ITC, Tata Motors, L&T. All of these stocks down anywhere between 1.5 to over 2%, and even Reliance, which is showing a cut of around 2%. So a lot of the heavyweights weighing in terms of the market today. That's all the time that we have on Mid Cap Radar. Your stocks once we're back.